Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and I will be your host. So today I'm looking at the Bitcoin chart, and I have a thesis. That thesis says that in a Bitcoin bear market, Bitcoin produces one of two structures. I label them pattern A and pattern B. In this video, I'm going to go through the Bitcoin chart history and show you these two structures that repeat one after another. And in so doing, I'm going to make my case that Bitcoin in a correction, a bear market produces one of two patterns, a pattern A or a pattern B. Let's get started. All right, so this is the very first time a corrective structure appears on the Bitcoin chart. This took place in November 2010. This is a very poor example of a corrective structure because it happened so quick. It's like a very small picture with very few pixels in it, so it's very blurry. This is a B pattern. So price moves up, comes crashing back down, and it does three bounces or waves down to a capitulation point. At the capitulation point, a pattern B does a bounce, after which it moves on to its recovery. In the very early stages of its recovery, it does a corrective little structure right here before going on to make higher highs. This is the first instance of a B pattern taking place. Let's move along and see what else history has to show us. Okay, so here we are at the next corrective structure, which just so happens to be an A pattern that took place on February 2011. All right, so price moves up, comes to a peak, comes crashing back down, and then does three waves, 1, 2, 3, down to a capitulation point. At the capitulation point, a pattern A does a V bottom. This happened on a very quick time scale, so it's one daily candle down, one daily candle up, after which it does that small little correction before moving on in its recovery to make higher highs. So this is the first instance of a pattern A taking place on the Bitcoin chart. Let's move along and see what else history has to show us. Okay, so here we are. The next one is a pattern B, and this took place in June 2011. As you can see, price moved up, came crashing back down, and we have three bounces, 1, 2, 3, down to the capitulation point, at which point the B pattern does a bounce. So we have a bounce down here. From there on, it moves on to its recovery. In the beginning stages of its recovery, it does that correction point before moving on to make higher highs. Another thing that we see here, now that there's more definition in this one took longer to play out, so there's more to the picture. We see that there's these intermediate lows that take place in wave 1 and wave 2. So wave 1 comes up, does an intermediate low, and goes on to make a lower low, which completes wave 1. Wave 2 goes up, makes an intermediate low, goes on to make a lower low, which completes wave 2. Wave 3 does not have an intermediate low. It just does a bounce to a capitulation point where the B pattern bounce takes place, and eventually moving on to make higher highs. Let's move along and see what else history has to show us. All right, so these patterns have been alternating. It is now an A pattern, and this took place in April 2013. So price moved up, came crashing back down, and then did three waves, 1, 2, 3, down to a capitulation point, which, since it's a A pattern, it does a V bottom. Eventually it moved up, and in its recovery, the early stages of its recovery, did this corrective structure right here before moving along to make higher highs. So what I'd like to do is I'd like to zoom in on this V bottom because there's something important that you should be aware of. And to do that, I'm going over to CoinTrader Pro. I have it on a 2-hour candle. So this is a zoomed in picture of that V bottom. So price came down, it does, and at the bottom, the base right here, it does three bounces, 1, 2, 3. Those three bounces make up this V bottom base before moving along to its recovery. Okay, so the next one that takes place in the chart is a B pattern, and this took place in December 2013. So price came up, came to a peak, came crashing back down, and then did three bounces, 1, 2, 3, down to a capitulation point, at which point, since it's a B pattern, it did a bounce in typical B pattern fashion, after which began its recovery, and it has that corrective structure right there in the early part of its recovery. After this, it goes on to make new higher highs. Again, we have these intermediate lows, so wave 1 starts, has an intermediate low, goes down to a new low, making wave 1 complete. Wave 2 starts, has an intermediate low, goes down to make another low, making wave 2 complete. Wave 3 does not have an intermediate low. It just bounces to its capitulation point, at which point the B bounce takes place. All right, let's move along and see what else history has to show us. Okay, so here we are at the next correction, and that is an A pattern. This took place in December 2017. So price moved up, made a peak, came crashing back down, and then did 3 waves. 1, 2, 3. This is a split wave, this third wave right here. I consider split waves one wave. It eventually comes to a V bottom. Now, what's interesting here is that this fractal has been stretched out by time quite a bit. So instead of on that third bounce going straight into the V bottom, you have this like dead zone of time where price just goes flat and then it falls, and then you have this dead zone of time at the base of the V bottom before its recovery. I would like to bring your attention to this base in this V bottom. Remember, I brought you over to CoinTrader Pro to show you what a V bottom base looks like. And let's move over to CoinTrader Pro. As you can see, we have those 3 bounces, 1, 2, 3, which make up the base of the V bottom. Well, it's the same thing here. We have 3 bounces, 1, 2, 3, before sharply pulling back out and making the typical V bottom recovery. So you have the sharp move in and you have the sharp move out. It's just stretched out by time. So after this, it does that correction. Now this one is really exaggerated as well, that corrective structure in the recovery. It's very large and bold, after which it moves along to make higher highs. Let's move on and see what else history has to show us. All right, so that brings us to where we are today. And as you can see, I've labeled it a B pattern. Now, the reason why I've labeled it a B pattern, if you've noticed, it's been alternating B, A, all the way through the chart. So it makes this one potentially, likely, most possibly be a B. So price came up. Now, just as I was pointing out to you there in the previous fractal, where time stretched the fractal out, another way a fractal can be changed in its appearance, even though it's the same pattern, is height and depth. Sometimes fractals, parts of fractals can be stretched very high, sometimes they can be suppressed. In this case, it didn't go quite as high. That happens sometimes with fractals. So we have a strong case, a historical case, what we should expect. I believe this is wave 1, it has that intermediate low. I believe this is wave 2, it has that intermediate low, just like those other B pattern fractals had. So I'm assuming that this wave 3 will be in like fashion to the other ones where it doesn't have the intermediate low, from which point we'll have the bounce and then that little correction in the recovery and then off to new highs. Well, I hope this video was helpful. If you found it helpful, it'd be much appreciated if you hit that thumbs up button. You can also follow me. I put out content on a regular basis, so if you hit that notification and that bell button, you'll be notified when I put out new videos. You can also follow me at Chart Historian on Twitter. And one more last key important thing, I am not a financial advisor, so nothing I present here should be construed as financial advice or investment advice. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.